While every major bank is suggesting the market is well overdue for a correction, extremely overvalued, and at historic undeserved heights, they continuously increase their targets. They know it's a mess. The media will talk about the political side, they'll talk about the health issues, they'll even throw in a kitten or two to make you feel all better. But the truth is that the Fed is pumping this market up with their activities, and that has given investors and speculators the green light to go all in. You came here for the truth, so let me unveil that for you. Today, I've got a massive jam-packed episode. There are tons of charts in this one. I'm not going to rant because you know how I like to. I want to just get into each and every one. I'll touch on it just very, very quickly. Let's go. I've got several charts from Goldman Sachs directly looking at what they had to say as it relates to the risk appetite indicator, RAI. Okay, so you'll see that mentioned. From elevated RAI levels, there have often been larger equity drawdowns, but not always. So we have to remember what this is all about here. You can see that there are different indicators which show the booms and busts. They show the excesses, and you can see when things are becoming undervalued. This happens from time to time, and this is just one indicator. Looking at this does not necessarily tell us that there's going to be a crash tomorrow, just like all of the other ones. By focusing on the 200-day moving average, are we going to know everything? No. By looking at the RSI, do we be able to foretell a crisis? No, but these things help to understand where the market is at, and then hopefully you're going to move or not move based on that information. You don't just simply say, well, I don't need to look at all that because fundamentals don't matter and so on. No, you have to be aware of what's happening to your money. This is your money. This is what you're speculating on. So you got to be aware of what's happening. Anyway, looking at this chart goes back from 91 up until the present, and you could see right here, we're at a level. Once it goes above this, it's 1.0. Once it goes above there, generally, there are crises that follow. Doesn't mean there is going to be one necessarily, but that's what's been happening. Right now, we're at that level today. That's what they're trying to highlight. But the funny part about this is that Goldman Sachs and all of the other banks that I've been talking about, not just for the last few weeks, but you go back further and further, and what they have said is, market's overvalued. Market is going too high. We're going to increase our target. We think the market is going to go up. That's the way it is. That's how funny it is, because the Fed's got the tap turned up and they believe that they can get to the next level. They're at the 10, but they think they can turn the dial to 11. We'll see what happens. Growth optimism has been the main driver of the increase in risk appetite since the fourth quarter of 2020. Looking at this, RAI once again, just showing you what's been happening over the last few years from 2014 up until today. And it's giving you these different things, just showing you global growth, monetary policy, dollar, euro area risk. Matching that all up. I just wanted to highlight the fact that we're seeing supposedly this global growth story that's come in throughout 2021. I really don't know about that. I mean, I just think it seems a little far-fetched, certainly in the stock market, but the economies, well, if they're largely shut down, how exactly is that going to happen? After reaching all-time lows in the first quarter of last year, our risk appetite indicator has recovered and is at high levels, because we have seen right now the stock market go, in March, it just fell off a cliff. You saw that. And then as a result, it just took off. It went up in a straight line. And there was basically a handful of stocks that were leading the charge. And then other things started to follow suit. So that's all I wanted to point out. You could just see it for yourself on this chart as well as the others. It's important not to just take their word for it, but actually look at what makes up a lot of these details. And of course, I show you that consistently here on this channel. That's what this channel is about. It's following all these different indicators, looking at the historical text, looking at all the information that we have at hand, and then you do what you want with it. From RAI levels above 1, near-term returns tend to be lower on average with larger drawdowns. Okay, I'm not going to get into all the details there, but I think it makes a lot of sense. When you see that things have hit a peak, they've hit a record high, it doesn't necessarily mean that there's going to be a collapse, a crash, the next recession tomorrow. But what it does tell you is that usually those returns that you got leading up to that point will not be had in the next little while, in that near term. Okay. That's exactly what we've said, looking at the moving indicators, how they have just gone in this direction so rapidly that those things like the 200-day have to catch up to it. When you see all of the different stimulus measures that have been put into place, that's what got it to this point. So now the real economy would have to catch up to it, or at least, somewhat of semblance of reality that there is. But anyway, when you have to understand why it hit this point, then you would think to yourself, well, it would take another round, actually a much more, even gone further, to get it to go even more. I hope that makes sense. So if the S&P dropped down 30%, to get it to come back up, not just to where it was previously, but to go even further, they hit it with that stimulus, they hit it with the adrenaline shot. Okay, but now is it sustainable? No. So in order to get it go even further, they're going to need another shot. So we'll see. They got the $600 checks. That really didn't do much. You got the $1,400 potentially coming. We'll see what happens there. But what's going to happen on the Federal Reserve side? They are just trying to highlight the fact that, no, we're not going to back off the pedal. Don't worry. Pedal to the metal. Pedal to the metal. Don't worry about that. So we'll see what happens. Reducing risk at elevated RAI levels can help performance. Interesting. Performance of tactical overlay strategy versus the buy and hold S&P 500. And you could see for yourself. I just think that it's interesting that they are suggesting the market's going to go higher, but not necessarily all in growth stocks, not necessarily in one thing. They are telling you to reduce risk. I'm not saying anything. That's what Goldman Sachs is saying. That's what they are looking at here. Buying from very low RAI levels tend to pay off even more. Performance of tactical overlay strategy versus the buy and hold S&P 500. You can see that on the right-hand side. I just think it's interesting when they actually put it on the charts. So you could see it. You could take what you want from it. Like I said earlier, ultimately what they are saying is that the S&P 500 will end 2021 at 4,300. Look, if you went back at the very end of 2019 and you asked them what they believed the S&P was going to be at for 2020. They always do these predictions. And it's funny because they put it at a certain level, and then we got to March and they completely drastically lowered all of those expectations. Then we got into, let's say, June and July, and then they raised them again. So these have as far as I'm concerned, they have absolutely no value. The reason I showed you this is because despite what they've said here, they're still predicting that the market is going to go much higher. So I believe that what the Federal Reserve is doing is completely skewing and distorting reality, or even the manipulation that's we're used to in the markets. This has gone way beyond that. Stock froth boiled after $600 checks. Now $1,400 may be coming. More than 150 million Americans would likely receive a payment. Day trader cash injection may add fuel to equity market mania. We'll see what happens. It's just showing you that things are insane. They talk about Elon Musk saying buy Signal. People bought a completely unrelated stock. I think it's hilarious. But regardless, what you are looking at is a mania. It is euphoria. Yes, you can make money in these periods of time. There's no doubt about that. You can look at all of the different assets that have risen here, but nobody really understands the fundamental reason why this is happening. A very young bull market in stocks is still minting believers. Equity exposure has yet to reach peak levels seen in the past. Elevated valuation seen echoing start of previous bull markets. This is what they believe. This is what they're going with. Regardless if it's Jim Paulson, the bull market is still very young. It is not even 1 year old, and considering a large US output gap and how high unemployment is, additional improvements in the economy should keep keep the stock market rising for a few more years. Not mentioning what's actually happening, what's underlying this, but that doesn't matter because the economy is actually doing so well. And the unemployment rate, well, what was the joke? They said 6.7%. I mean, does anybody actually believe that? Please, if anybody could, if you would, do me a favor. In the comment section, if you believe that this is the real rate, okay, please put it in the comment section. I really want to know because just like others out there, I need a laugh. I need to be able to have a chuckle once in a while. So, I would say that is not, just to be clear, that the 6.7 is absolutely not accurate. I think it's much higher. But if you do, please list that in the comments section so we can talk about it. This is the chart that corresponds to that. You can see what's going on with the PE ratios of the S&P 500. That is in white. And you look at the earnings per share, which has been declining. Nobody really actually cares about earnings anymore anyway. Nobody cares about profits. All that matters is the stock price. And you can pump up the stock price simply by doing buybacks because you borrow money from the Federal Reserve, who keeps interest rates at 0% and making that money cheaper to flow around. And this is a whole cycle that has created a boom unlike anything we've ever seen. Blank Fine called it. Now the whole world is watching commodities. In September, the ex-Goldman CEO suggested investing in materials. Over $30 billion have been added to bullish wagers since then. So right here, you could see that what's been happening over this last little while. First, there was tech. Then you saw some more rebalancing of the portfolios. A bit were going into different plays. And I showed you that here, what the investment strategies had been, but you now see that commodities are rising, okay? And it's not just one commodity or the other. We are looking at all kinds. I mean, the agricultural commodities have been hitting higher. Looking at the commodity index in general, that has been going higher. This just shows you cash pouring in. Speculator commodity position grew 30 billion since Blank Fine's recommendation. That has gone absolutely haywire, actually, if you see it since November. This just shows you that there is an expectation in some cases that the return to normalization is coming. That's why copper, I think I have that in the next chart coming up here. Copper is doing so well. You would buy that in times when you think that there's going to be a lot of, boom in materials needed and so on. Copper is obviously very important and the price has been going up. If you look at different agriculture and so on, this is all telling. But at the same time, you've got problems with the supply chain. You've got issues with these different, the shipping industry and so on. This is all increasing the price, and that has been a factor as well. Right here, take a look at what's going on with copper. It has risen to a high. It hasn't been a long time. Looking at the previous peak on this chart, it just shows us that during this period, 2017, 2018, it was also quite high, but it had come down throughout these years, 2018, 2019, falling right at the beginning with everything else, right there at the beginning of 2020. And now it has just gone up in a straight line. And that just shows you that there's certainly been speculation there, but also other factors at play. This is an article talking about the grocery prices in northern China soaring by 50%. They did a lockdown, and as a result, everybody went to the store, started panicking, started grabbing whatever they could as the prices were rising that they were forced to. The only reason that I show you this, this might not even be legitimate. Who knows this type of information? We don't know what's true. We don't know what isn't. But I could tell you that as soon as you have instances like this, where there's going to be a shortage for some reason, if it's the supply chain, if there's a problem with that particular crop, if there's been recalls, it could be anything, absolutely anything. Obviously, there's going to be this demand that's there that may send the price rising significantly. The shortage would, of course, put additional pressure on the people who are importing it, the farmers. You've got all of the different parts of the supply chain. That puts pressure. The individuals, they can't get what they need, especially if it's a staple food. That's another thing there, okay? All of this really to lead to you, to tell you, the video I did yesterday, the day before, whatever it was, when I was talking about food, how important it is that you have a supply of your own. Even if it's just a small amount, it's going to help so much. But I won't rant on about that. Check out the video I did showing my face on camera. That one is the one to check out. Quick update from the Federal Reserve. You could see the total assets at about $7.3 trillion. It is 3 weeks in a row now that the total has declined. So what is it? Are they not printing anymore? No, of course. You could see this just showing you the Treasury securities increasing week after week after week after week. If you break it down, you go in further and you could see it for yourself. The Treasuries are increasing. The mortgage-backed securities are increasing. It's the other programs week to week. It all depends on what's happening. If there's not enough take on certain programs and so on. But if you want to search this for yourself, I always mention this. Just do a search on the internet for Fed H41. If you type that in, FED space H41, you're going to get this directly from the Federal Reserve's website. I actually try to empower you. I try to show you all of the resources. Every link is in the description under the sources for you to check out on a regular basis, but I actually actively try to get you to know this information because all media should be accountable to the data that they present. That goes not just for the mainstream, my goodness, they're a lost cause, but for the alternative. I see it, and I see it time and time again. They are not sourcing their materials. They just say certain things. It's all speculation. It's meant to get people heated up. They say it came from this, and you go and you try to find the actual source, and it's really nonsense. It's not believable, but people are suckered into it. Look at what a mess it's been recently. There's so much misinformation going left, right? Nobody knows what to believe anymore. But at least in the financial world, we can not necessarily trust one point, but we can start to triangulate and we can get a good idea of what's happening. Anyway, that's enough. I tried to keep this video short as possible. Hopefully I didn't go too long. That's all for this video. If you found it informative, hit that thumbs up button. You've got to click that button. Come on, support the channel. Click a button. Thank you very much. If you want to learn about e-commerce, you want to understand what's happening along with everything to do with online purchases and so on, you can get that information for free at the AmazonGPS.com. If you want to understand the financial system, everything from the central banks to interest rates to how to make money, all of this is available in my 2 books. Check it out at the link in the description. And if you prefer the audiobook, that's available at themoneygps.com. All right, that video I was talking about where I put my face on camera, talking about food, talking about the shortages, talking about all of that. It's important to watch it. It's right here. Click it. I'll see you there.